Take us and break it down to the fundamental, even to what that means, right? And even
Sure.
to with such a large percentage of the real estate community being relatively new to the industry, and I think will be really beneficial and educational for folks listening in, so they understand kind of what an assumable mortgage is, right? If we can just kind of break it apart at third grade level, that's kind of like how I like to operate on third grade reading level. So
you got it. That's what I'm spending my time doing, because I got into this and started this. The thing I didn't realize was how little knowledge about this was in the marketplace. Mm-hmm. And so the people that I found that have any knowledge of this tend to have a lot of gray hair, because they've been in the business 30 years and that's the last time these things were around. So let's talk about what an assumable mortgage is. An assumable mortgage is a loan that's in place on a property that when a buyer comes in to purchase a home, they can take over that loan instead of getting new financing. The old stuff that used to be out there oftentimes was what they called a non-qualifying assumable, where anybody could show up, say, I want to take it over, sign a piece of paper, and boom, it's your deal. That stuff's all gone. The only loans that are assumable in the marketplace today, like I said, are VA loans, FHA loans, and the small number of USDA loans, maybe 1% of the marketplace rural product out there, right? And they are all what is qualifying assumable, which means that anybody who wants to take them over must qualify in the same way and to the same standards as the borrower who originally took that note out. Okay. Right. And so one of the big things to think about is in a transaction, the transaction's fairly normal with a few exceptions, right? You think about it, you put a home on the market, any home, you usually have a seller who has a price that you're going to ask for the home. And then there's hopefully a bit of equity in there that they're going to take when they sell the home, and the loan that they had to buy that's still in place on the home is what gets paid off at a normal closing. In this scenario, the sale happens, the loan doesn't get paid off. It becomes the responsibility of the buyer who bought the home that qualified to assume it. So you sell a home for $500,000. The home has a $450,000 loan on it. The difference we call the assumption gap. We try to train people that is effectively your down payment, the amount of money you need to bring in cash, and then you process, instead of processing with a loan originator, a new loan, you process the qualification with the existing servicer of the existing mortgage, which is the role effectively that we fulfill as a company, Assumption Solutions. Our role essentially is we collect everything that we need to from a seller that allows us to communicate with their servicer, and we collect everything from a buyer, once the contract is put together, that the servicer is going to require to take them through the process to get them qualified and approve the assumption. And we deal directly with the servicers for a fee. Our process fee-wise, just to discuss that real quick, it's pretty reasonable. We charge each party, both the buyer and the seller, a fee. And that fee to each party is $550. So effectively, when we're involved in a transaction, it's $1,100. We collect a $50 kind of engagement fee from each party. And then we start processing. And then once it's approved, we collect the remaining $500 from each party. So for $1,100, our goal is to make the process simple for the buyer, the seller, and the agents who really, as from my perspective as an agent, like I don't want to get involved with the messy middle stuff that I have no knowledge and experience on, essentially. Right. So now let's talk about some of the, like you said, breaking it down into the important pieces that people need to know with an assumption. The first thing I want to talk about is the VA assumable. a VA loan is a veteran benefit specific to service members who have eligibility, right? When that veteran wants to sell a home and allow somebody to assume that mortgage, anybody can qualify to assume that mortgage, whether they're a veteran or they're not a veteran. But there are some caveats that are important. A veteran has a certain amount of eligibility for a VA loan that is kind of like a cap, right? When a veteran allows another veteran to assume that loan, as long as the veterans both have enough eligibility, they can swap eligibility. Meaning, when the home is sold, not only is the seller released from liability or responsibility on that loan, their eligibility is released because the new veteran swaps on their eligibility, right? If you go veteran to non-veteran, they're released from liability and financial responsibility for that loan, but the eligibility portion that was used on that loan remains tied to that loan until it's gone or paid off, right? And so that doesn't mean a veteran's total eligibility to get another VA loan is gone, but it would be reduced, obviously. Eligibility, it's kind of a complicated math problem almost for the marketplace, right? So I can't say it's a certain dollar in every market because it's not, but like a veteran, if they allow another non-veteran to assume their loan, let's say they come out of a sale with a bunch of equity, so they have a large cash down payment on their next purchase, and they only need a certain amount of loan, they might still have some eligibility to use and they can get another VA loan. So it's not easy to quantify in that scenario. What we're seeing in what we're processing is we're seeing quite a bit of both. We're seeing veterans who only want to go veteran to veteran. Mm-hmm. And that's a decision that I think as agents, you need to be able to explain and let your seller make the choice as to what they're willing to do. We have seen veterans who don't care. Specifically, maybe somebody who's coming with a lot of equity out of a house, or, is going into their last house and, they don't really have to get that next VA loan. So, and sometimes we're seeing people that are just like, whatever it takes to get my home sold. Veteran, non-veteran, I don't care. I need to get out of this house. I need to be in something different. I'll go get a conventional loan in the future. Because at the end of the day, some people just have to get it sold, and whatever gets the home sold the fastest.
Right.